You are in a 5-year race to accumulate as much Bitcoin as you can. There will never be another 5 years like the 5 years ahead. The fastest shift the world has ever seen. I would categorize where we are today as the Wall Street attack phase. People underestimate what Wall Street is willing to do to take your Bitcoin. Wall Street is going to do what they did in 2021, Celsius. That was the beta test. I know people love Michael Saylor. Once you are a public company, you are an asset of Wall Street. And that is the attack. And most people are falling for it. The US is in a major issue with its debt right now. And BlackRock got all of its clients some Bitcoin. They're preparing for this managed transition for universal basic income, Elon's social credit score, Palantir's artificial intelligence technology. That is the future they are managing right now. You've got a choice. Which side of that are you going to be before it's too late?
Archie.
Simon Dixon, welcome.
Thanks for having me. It's been a while since I've come back to London, and it's a pretty pivotal moment. So glad to be here.
It's a pleasure to have you. Last time we spoke was, I think we interviewed on Spaces in the depths of the bear market, and you gave us a really thorough understanding and recap of the history of Bitcoin, particularly with all the catastrophes that were going on in the bear market, and there's certainly been many in the history of Bitcoin as well. So it's really good to actually catch up in much better times, because that was quite a dark mood in Bitcoin when everything was just collapsing and nobody knew where it would end. But like I said, we're in much happier times right now. So I wanted to throw it over to you with the context of your history in Bitcoin of almost more than 10 years. How do you see where we're at now? Where is Bitcoin right now?
Yeah, well, it's 14 years on this journey. So I spoke at the first Bitcoin conference in Prague. That was in 2011. And I wrote the first published book in the world to include Bitcoin. That was Bank to the Future, Protect Your Future Before Governments Go Bust. And it's actually very surreal to see where we are today. But I think I would categorize where we are today as the Wall Street attack phase. And so the entire history of Bitcoin has just really been about countering attacks. And being involved in this anti-fragile network that is now over $2 trillion. And when I first spoke at that first Bitcoin conference in Prague, it was us versus the banks, and about 50 to 100 people in a room, a very small community. And to see where we are today, where the largest power structures in the world, whether it be, the IMF, the Federal Reserve, the Trump administration, El Salvador, and just every single power structure in the world has now adjusted to this Bitcoin, and seeing where it's come has just been this remarkable journey that, quite frankly, throughout the whole journey, you kind of always, as a Bitcoiner, I've been advocating for it for 14 years and always believed that it would become something amazing, but it still shocks you when it actually happens. It still surprises you, even if you're thinking that this could happen. When it actually happens, it's and quite frankly, I think it's a lifeboat. And then I think in this massive amount of craziness and turbulence that we have globally right now, just to be able to say that there is an exit, there is something that you can opt out. There's something you can boycott, and Bitcoin is that boycott. Bitcoin is that opt out. Bitcoin is, that to be able to give somebody something that they can do when the world is going crazy, quite frankly.
Looking for a secure, trusted way to buy, sell, and hold Bitcoin? Gemini has been leading the way since 2014. Founded by the Winklevoss twins to be a security-first, fully regulated Bitcoin platform. With Gemini, your Bitcoin is protected with enterprise-grade security, backed by insurance and Type 2 certifications for SOC 1 and SOC 2. Whether you're new to Bitcoin or a long-time hodler, Gemini gives you the tools to stack sats and build generational wealth your way. From simple one-tap buys to advanced charts and trading features, it's all here. Buy, sell, and hold securely. That's Gemini. Gemini. Bitcoin with confidence. Need cash without selling your Bitcoin? With DeBiFi, you borrow against your Bitcoin, non-custodial, multi-sig escrow, and you keep your keys. No banks, no selling, just institutional grade liquidity with terms up to 2 years and APRs as low as 9%. All transactions are signed using private keys on your own device. Using a 3 of 4 multi-sig setup, 3 out of 4 keys must approve every transaction, giving you control, transparency, and peace of mind. Whether you're a hodler, miner, small business, or treasury team, DeBiFi gives you the cash you need now without giving up your Bitcoin upside or triggering a taxable event. Get liquidity, keep exposure, and stay secure. That's DeBiFi. DeBiFi, your Bitcoin, your money. So even from the very earliest days, we had a Bitcoin revolutionary like Hal Finney was talking about the potential need for Bitcoin banks. And yet we have certain sections of the Bitcoin community lamenting the fact that Wall Street and TradFi have sort of come on board, and it's starting to look the way that, the early Bitcoiners always envisioned Bitcoin becoming. So what do you say about the dichotomy of the early Bitcoiners versus the Puritans who are kind of lamenting what's happening right now?
Yeah, so I think we've hit a two-tier Bitcoin world. And there is Bitcoin in Wall Street, in custody, whether it be a Bitcoin treasury company, whether it be somebody, handing over their Bitcoin in order to borrow against their Bitcoin, whether it be, any type of wrapper into an ETF. And then there's Bitcoin in self-custody. And I think that people underestimate what Wall Street is willing to do to take your Bitcoin, get your Bitcoin. And I think everyone's going to go through some really hard lessons of a real coordinated, engineered process in order to teach people that they should own Bitcoin in self-custody. Then you got Bitcoin in self-custody, and Bitcoin is money you can own, money you can spend, and money that has a fixed supply with a monetary policy that nobody can change. My fear is that most people in Bitcoin come in for the number go up technology, and until they go through a disaster, then they realize that the money you can own and money you can spend is the real utility. So people often, I debated the Peter Schiffs and various people over the year, and, they pull out the old argument that Bitcoin has no utility. What is the utility of it? Well, gold can be used for dentistry and jewelry. But I've always maintained that the utility of Bitcoin is self-custody, that to be able to escape any country in the world, take your value with you, and to be able to do that at scale and have money you can own in the banking system is guilty until proved innocent today. It's a mass surveillance Orwellian nightmare today. My money at a bank, if I try and spend it, I know that I've got a very small, slim chance that they will just process the payment. And I know most people, they're used to very small payments, but when you start having money at a bank and you're trying to send it in the international system, I don't expect it to go through. Some of my payments when you're dealing with money that came from Bitcoin that's going through international banking, it can take I've had payments that can take up to 6 months to clear, just trying to get fiat currency through the system that gets lost in the SWIFT system. And it's an absolute nightmare. Like, banking is getting worse and worse and worse. It's not getting better. That's what the banking system, in this guilty until proven innocent, and then to be able to send transactions in the innocent until proven guilty system is things that people won't learn until they have to actually learn it in most cases.
You mentioned that people don't really appreciate Bitcoin until they experience some kind of catastrophe. And very briefly, you touched on the debanking or the freezing of funds. What are the other catastrophes that bring into light and sharp focus Bitcoin's virtues and properties?
There are so many. Anybody that's left Bitcoin on an exchange and received a Bitcoin IOU, they understand that a Bitcoin IOU is the same as a banking system. And when that exchange goes, you realize the importance of the ability to be able to self-custody. In in an environment where governments are changing, I've witnessed, I left the UK 10 years ago, but I've witnessed the UK turn into, a deeper and deeper surveillance state. We're now having digital ID, which will probably be integrated with Palantir's artificial intelligence. That is definitely headed towards a central bank digital currency, or maybe you get a stable coin along the way. When we start to see what the plan for money is, which is unfolding right in front of us, which is a digital programmable social credit score that if you don't opt in or you don't configure to how a government or a corporation wants you to behave and spend, then we're definitely moving towards that money being a financial weapon of mass destruction and a tool for surveillance, and a tool for a police state. That is what fiat currency's end inevitable goal is. And the reason is because it's a Ponzi scheme. And it's a debt-based Ponzi scheme where the money to pay the interest on debt, and all money, all fiat currency is created as a debt. The money doesn't exist. And so the end result of that is that you need to get the government deeper into debt, individuals deeper into debt, corporations leverage debt in order to end up with more and more assets and more wealth inequality. And that takes you to an environment at the end of a debt cycle where the governments recognize that there's so much disparity between the wealthy that have played the debt markets well and the people that have got on the wrong side of the debt markets, i.e. they're consuming, they have 30 to 40% interest on credit cards, and they're living month to month. That disparity creates an environment of civil unrest, an environment of desperation that eventually can only be fixed by a 1984 Orwellian nightmare and turning fiat currency into that. And so that is the future of fiat currency. It's inevitable, predictable, it's guaranteed. And so the wealthy know how to exit that. They've already accumulated their assets. They had gold, now they have Bitcoin. And sadly, not enough people are going to understand that. And so the world is going to give us, when you see the end game for what fiat currency is in this digital world that we're going, people are going to understand why they need the ability to own their own money, spend their own money, and have a fixed supply that doesn't inflate away like an ice cube.
So there's almost a double dip in, first of all, your money is debased through inflation money printing, but then they force you to keep it within the system. And by using the system itself, you incur these transaction fees over and over again that again debases your money. It diminishes your purchasing power because you're having to spend money to transact every time. Whereas with Bitcoin, as we know, it's much cheaper to send almost limitless amounts of value right around the world.
Yeah, and the whole concept of a number go up technology, is why most people will end up with a Bitcoin ETF or something that, in an environment where stocks are being manipulated and they're always issuing more, in an environment where government credit ratings are putting more and more questionable, even from the empire down to the third world emerging market, it looks like those two are looking very similar right now. The tactics that the Trump administration are using right now, fiscal dominance in order to devalue the dollar, devalue the debt, and all the different ways that you can escape. It's Bitcoin with this fixed supply is just something you can predict. Once you understand how Bitcoin functions, it's a lot easier to understand than the rest of the world, quite frankly. And when we enter into this world where assets are going up, not because they're more valuable, they're going up because the dollar's being devalued, and every other fiat currency is a derivative of a dollar, which suffers much worse consequence because all these other fiat currencies are just a mechanism for sucking up the world into dollar debt. And you have these dollars and all these derivatives on top of it that are if you save in them, which the average person is doing, you're driven into this wild debt-based Ponzi scheme with the dollar at the base level, and now the base level is devaluing itself, and in a debt-based Ponzi scheme that is really reaching that end cycle, and people need Bitcoin for that to be able to escape that. But then the other side of it is also the surveillance side and what they can do when you custody your money with somebody else. And I think people are going to be surprised what comes and how they try and fix this system. And I think that draws a very clear line between essentially Bitcoin and everything else that came from it, the crypto markets. The crypto markets are going to be exposed for what they actually are, which is, in the end, a venture capital, pre-mined fiat currency pump and dump scheme that will create the surveillance technology through stable coins and all these other mechanisms in order to create a nightmare of the fiat currency system. And all of that crypto stuff is going to be consolidated into Wall Street through these financialization, securitization, tokenization. And Wall Street is getting to fully capitalize upon, this crypto side and the distinction between Bitcoin in custody, Bitcoin in self-custody, and all the other crypto stuff over the next 10 years. If you don't figure that out, and I think we've got less than 10 years. If you haven't figured that out, probably over the next 5 years, you're going to end up in a universal basic income, surveillance state, Orwellian, get the vaccine or you will get negative interest rates type of nightmare. Or you're going to be in this tiny percentage. And sadly, I think the people that end up with Bitcoin and self-custody are going to be the new, conspiracy theory mega class of people that people will create all these conspiracy theories around how they ended up with so much Bitcoin. And you've got a choice. You're going to be on which side of that are you going to be? And my prediction is that anyone that does it through Wall Street, through ETFs, through pensions, through Bitcoin-backed loans, any of those things, Wall Street is going to do what they did in 2021. They're going to create an elaborate scheme in order to end up with your Bitcoin in their wallet that they control. And so the self-custody stuff is ultra important for people to figure out now before it's too late.
So you mentioned IOUs as being one of the catastrophes that could awaken people from the slumber of not holding their own Bitcoin. A lot of people have been critical of ETFs as being representative of paper Bitcoin, so to speak. But don't you think there is a place for Bitcoin ETFs for a certain type of investor also?
The tragedy of this is that Wall Street, through its ability to control through lobby governments, they've created an environment where the obvious and logical thing to do is own your assets with them. And that's by design. The complexity of the financial markets, the innovation of ETFs was a mechanism for taking as much control as possible. And so we've ended up in a world where BlackRock essentially is on the board of 20,000 companies, that has the largest shareholding in almost all those companies, has technology that advises Treasury, has technology that is used by the Federal Reserve.
You're talking about their Magellan model that advises something like tens of trillions of dollars around the world.
Yeah, absolutely. There's a technology called Aladdin that they've always used. And every asset manager and fund manager at scale also uses the same technology. And so we have essentially recreated in a shadow way what I call, I term the name from proof of work, proof of weapons, because it weaponizes all of these different companies and all of these different technologies and all of these different military, all this different stuff. And BlackRock is essentially, I think, the Dutch East India Company, of the Dutch Empire, and the British East India Company of the British Empire. BlackRock today is the American version of the East India Company. It is more powerful than the US government. It is controls the European Union to a very strong degree, and through its ability to decide who gets to borrow in capital markets and manipulate share prices way out of any kind of reality. We have created this shadow government called BlackRock that represents corporate interest. And we're giving them our Bitcoin. And some people are giving them their Bitcoin. Why? Because the tax system was designed where it's tax efficient to put it via your pension contribution. And what was a pension? A pension was a mechanism for saying, give all your money to BlackRock and the asset managers and we'll manage it for you. And we'll take your voting rights from your shares and we'll install our board members. And so through this tax efficiency, plus individuals thinking about how do I handle inheritance, and this vast empire of money managers that all get fees out of every transaction, that all gets their annual fees, we have essentially given the asset managers full control to the point where all of the universities and colleges are the largest endowment funds in the world. All of our pension is being sent to BlackRock every single month. All of our insurance premiums are being sent to these large asset managers. And every mechanism for pooling all of this money into this one power vacuum that now can pay for any politician, that can buy any president, through their shares in military companies, control the quote unquote deep state, the intelligence. And they can manage a portfolio in order to maximize all of these different governments that they have bought over time into this massive, power structure that is way bigger than any government, and no governments work for the people in their country anymore across the collective West. And so by making these vacuums, in 2021, I believe Operation Choke Point 2.0 was an operation in order to make the industry look bad, end up with a bunch of Bitcoin on banks' balance sheets, play this type of chess game, and then approve the Bitcoin ETF in order to get as much Bitcoin ETF, as many people to, have Bitcoin exposure via BlackRock and in custody, then launch Bitcoin-backed loans, so that they can persuade as many people to borrow against their Bitcoin to issue more fiat currency, and issue Bitcoin treasury companies so that when they need to do any type of distressed takeover of all of these Bitcoin treasury companies, they can consolidate all of this Bitcoin into one honeypot, and they can use Bitcoin that they've got and that they manage to use the leverage of fiat currency in order to wage currency wars around the world. And the only people that would be protected from that are the people that have Bitcoin in self-custody.
I'm interested in why you think the approval of Bitcoin ETFs was connected to Operation Choke Point 2.0, because Grayscale had to go to court to get a decision that overturned the SEC's ruling, which eventually led to the approval of Bitcoin ETFs. So it would seem to me that if they were connected, Grayscale wouldn't have had to fight tooth and nail to get that decision to overturn the SEC.
Yeah, so you have to take a few leaps and you have to put a few things together, and there are things that we will never know because I study these different intelligence operations over time, look back at declassified documents, try to put that together with future red herrings, and you never get the full truth. But what I do know is that there was definitely a coordinated effort, and I was involved in one Chapter 11 bankruptcy because I decided and thought it would be a good idea to take a small percentage of my Bitcoin and borrow against it and test it out. And I ended up using Celsius because I'm an investor in over 100 different companies in the industry. I wanted to see if this borrow against your Bitcoin industry was a thing. So I went and met all of the different providers, see if I could invest. Interestingly, Galaxy took our allocation in BlockFi, so I got protected from that one. But we ended up with a shareholding in Celsius, and I decided to test out the service. And from that process of seeing Celsius go into bankruptcy, I spent, because I'm a bit of a geek, I spent 2 years in that bankruptcy where I was actually lobbying the judge. We managed to persuade the judge to not sell the Bitcoin. It was the first bankruptcy other than Mt. Gox, or the first US bankruptcy where we managed to get them not to sell the Bitcoin, which ended up being the pivotal decision in the case. And I read 4,000 different documents and engaged in every single part of the process, including putting together plans, understanding how the entire process worked, investing a lot of money in legal fees. And because I understood every single part of that bankruptcy, I found absolute foul play in the Celsius bankruptcy that connected it to a much, much deeper agenda than the normal agenda. And to give you a few ideas, the deep state, as I call it, consists of CIA, Mossad, these different intelligence agencies. And there was a deep connection between those players that were involved in Celsius. Some of the hacks, I'll give you a small example. One of the hacks that happened that led to the loss of client ETH was done via a company called Bancor DAO. When you look at Bancor DAO and then you connect it to the different players, you had Alex Mizhinsky, who was the CEO. He's got a background in terms of his connections in Israel. You had Daniel Leone, who didn't end up going to prison. Alex Mizhinsky got 12 years. Daniel Leone didn't go to prison. He escaped to Israel, and he's now doing an AI startup with the Prime Minister's Office of Israel. His wife, who is now head of social media for the Israeli Defense Force, who put out the propaganda that led to the arrest of the fall of the United Nations Palestinian Division. She was head of loans. And the company that got hacked, one of them, there was multiple of them, Bancor DAO, the largest shareholders, was the niece and nephew of the Prime Minister of Israel, Benjamin Netanyahu. And so when you went deep into all of these different cases, you realize that the net result was that there was this multi-billion-dollar Ponzi scheme that made the industry look really, really bad, led to 650,000 victims. Because I was working with many, many of those victims to try and help them deconstruct what was happening, I ended up the 7th largest creditor in the case. We had people that lost their life, took their life because they couldn't handle what happened to them. They couldn't face their family to tell them we've lost everything. Mizhinsky persuaded them to drain out all of their retirement funds, all of their 401ks, put it into this Ponzi scheme. That's just one case that I looked at, and I can see deep connections to deep state actors and operations. Did spend a bit of time on FTX. There's lots of questions there, and you can go around this circle. But what really happened was you had Operation Chokepoint 2.0. You had the crypto-friendly banks that were connected to many of these companies like FTX. Those banks were wiped out by FDIC, and some of them still to this day say that we didn't need to be wiped out or taken over by FDIC. We had the regulator.
Just to clarify, the FDIC is a US government regulator which is accused of wiping out a bank that was solvent.
Yeah.
Why would they do that?
Because they wanted to take over. I'd say that they wanted to take over the banks that were connected to having 24/7 clearing system between what I think these suspicious operations like FTX were. And so if you look at the banks that were allowing for the 24/7 transactions between the hedge fund Alameda Research, run by or started by Sam Bankman-Fried, and FTX, the exchange that was started by Sam Bankman-Fried, it was these banks that were allowing for funds to clear in the fiat currency rails between the hedge fund and the exchange. And then you had these elaborate shit coins that were launched, pre-mined coins, and you put together this cocktail mix of financial weapons of mass destruction that allow you to manipulate markets. And once you do a hack in Celsius, a part of the balance sheet is missing. And it created this very elaborate, crypto industrial complex, whatever you want to call it. And the end result was that the crypto-friendly banks were wiped out, even though some of them claimed they were solvent. You had the industry looking really, really bad. You had a regulator that wouldn't meet anyone in our industry. I'm shareholders in companies. I was an early investor in Coinbase, Kraken, Bitfinex, Circle, Blockchain.com. All of these companies wanted to meet with regulators to put together their strategy. None of them could get a meeting. The only person that could get a meeting with Gary Gensler was Sam Bankman-Fried. And at the same time, you have, now only now you have people like Jerome Powell coming out and saying, yeah, we probably should look at this Operation Choke Point 2.0. We should look at the Fed policies. But what was the net outcome? The net outcome was you ended up with the Trump administration with a pro-crypto policy, which is building this Orwellian stablecoin nightmare. I believe in a wolf in sheep's clothing, using Bitcoin strategic reserves as a narrative that got people on board to this. You ended up with BlackRock ETF approved. You ended up with banks able to put Bitcoin on their balance sheet and lever them up. You ended up with companies like Cantor Fitzgerald being able to offer fiat currency loans, and they are a primary dealer direct into the Federal Reserve in order to leverage the debt. You ended up with the Trump administration creating this whole stablecoin ecosystem. And you ended up with all of the tools for Wall Street to persuade as many people to own their Bitcoin with them, get as much Bitcoin as possible. All these Bitcoin treasury companies, once you are a public, I know people love Michael Saylor. The way that this scheme works is that once you are a public company, you are an asset of Wall Street. If you've taken billions and billions and billions of dollars from financial terrorists that invest in corporate bonds, you are owned by them. You are an asset of them. That's how it works. If you are a CEO, you work for the board. If you're a board, you work for the shareholders. Who are the shareholders? BlackRock. What about all the Bitcoin mining companies? You ended up with all of these mining companies over in Texas. They all went public. So now you've created essentially the function to take a massive chunk of the Bitcoin ecosystem and control it within the confines of Wall Street. And that is the attack. And most people are falling for it because it's tax efficient. They can't be bothered to figure out self-custody and inheritance. They're idol worshipping these new Bitcoin massacres, that articulate Bitcoin very well to Wall Street. And everyone's excited because the number goes up, not knowing that anybody that falls for this will eventually, just like in 2021, Operation Choke Point 2.0, that was, I believe, an operation to replace these companies with Wall Street, hand over the industry to Wall Street as much as possible, and then create a pro-crypto environment to persuade as many people to own their Bitcoin and with them. And crypto is the tool, fiat is the weapon, and many, many people are falling for it. And now they've got all the tools they need, and I think they'll push through into a bull cycle. And I think it really goes into the wider macro issues of the US government debt, fiat currency, and the wider geopolitical issues as well, because this is entering into the currency war stage now. So Bitcoin is going to be placed at the very, very center of a future and upcoming currency war, because the geopolitics are resetting the world. The US is in a macro, major issue with its debt right now, and BlackRock got all of its clients some Bitcoin. They're preparing for this managed transition, and a lot of people are giving their Bitcoin to BlackRock, so they are empowering BlackRock rather than empowering themselves.
So I'm quite sympathetic to the idea that leverage in a system creates instability, but what we saw in the last cycle with leverage that had, margin calls baked into the contracts are quite different to the circumstances and the conditions under which a company like MicroStrategy or Strategy is borrowing. And in some cases, they're like perpetual preferreds. They're well and truly in the driver's seat versus the conditions we saw around a lot of the debt that typically, traders were taking, hedge funds were taking, and the rehypothecation of assets as well. I mean, I see that as being night and day difference, particularly with the long term and the perpetual duration of what Strategy is issuing compared to what hedge funds were dabbling with, which was essentially, just a tinderbox waiting for a spark, and we eventually got that. So can you just compare the two and perhaps illuminate why I'm missing that angle and likening one with the other with respect to instability in the system? Because I don't see that yet.
Yeah, so if you look at Strategy in isolation, then you see a company that looks relatively safe. It started with the Bitcoin Strategic Reserve strategy. It then it's about to approach the point where it's in the S&P 500. Once it's in the S&P 500, it then gets included in ETF and index funds. Once you're in index funds, you get to reallocate everybody's pension over to the fund managers, and you end up the largest shareholder. Once you're the largest shareholder, like BlackRock, you then get a board seat. And once you get a board seat, you are a weapon. MicroStrategy is a weapon for the Proof of Weapons Network, which is their Bitcoin holding company. You then introduce slowly over time more leverage products, i.e. you commit to dividends in fiat currency. Now we're nowhere near the point where this is distressed, but we've had it go from 3.5 times, the value of the Bitcoin to approximately 1.5 times the value of the Bitcoin. Now that looks a bit more like JP Morgan, 1.5 times their book value of their deposits and client assets. So it looks more like a bank in terms of its valuation. It has fiat currency commitments and the ability to continually roll those over time. And its creditors are, the largest asset managers in Wall Street through these different debt instruments. Now you have the strategy as the base. Then you build around it a financial industrial complex, which involves stable coins, so issuing stablecoin loans from people that put their Bitcoin ETF or their Bitcoin around it. You also have Bitcoin treasury companies that can trade at a discount. We just had Nakamoto crash 96% from its original, its high, 50% in one day. Wall Street are masters of leveraging fiat currency in order to do leverage buyouts. And so they can borrow in order to acquire these companies and roll them into other different. So you've got this pipeline that Wall Street always builds up. And it's when you combine all of these different products together, and then you introduce the ability to borrow against your Bitcoin, that you can then do this margin process. And maybe Strategy is the chosen one that ends up with all the Bitcoin. But BlackRock will be the largest shareholder in Strategy. And now you've got this elaborate pool to end up with 1 million, 2 million Bitcoins all held. And that becomes BlackRock's strategy. and they will have their own mutual funds that will also get exposure. They'll also become shareholders in all the different Bitcoin miners. And they'll also potentially, goes into the debates right now. People are discussing whether Core or Knots have been compromised. They're both making accusations at each other to implementations of, software for Bitcoin. Believe me, BlackRock will play in those games if they can. They will try and use their bribery networks or whatever in order to try and compromise, which is why competition is so important there. So I'm not saying they're going to succeed, but they are building a complex, and it will become a tool for the Wall Street side of Bitcoin. And Strategy is most likely the one that will be able to consolidate it. People talk about the government of potentially nationalizing Strategy to end up with some Bitcoin. The government's not in charge. Corporate power is in charge. This is how BlackRock controls most of the companies. And when I say BlackRock, it's BlackRock, it's State Street, it's Vanguard, it's JP Morgan. It's a financial industrial complex. The Goldman Sachs, they create the weapons. The JP Morgans, they issue the debt that determines how they have control over all the executives. Because if you don't play their game, you don't get access to that junk bond debt or that corporate debt. And you have the asset manager that's able to redirect the flow of capital because everyone's given them their money. When you put those players together, you have a network that is able to engineer rates at the Federal Reserve. People think that like Jerome Powell is in charge of the Fed. Jerome Powell is a front man. The Federal Reserve is owned by 12 regional banks, and those 12 regional banks are owned by the private commercial banks, the financial industrial complex. They meet every quarter and tell Jerome Powell what they need to do. Jerome Powell is a front man. He's a patsy for the banks. What about Trump? Trump was paid for by the financial industrial complex. His number one donors was Elon Musk, the technical industrial complex, building these deep state tools, these social credit scores, with companies that were funded by the CIA venture capital arm that get Ministry of Defense, they get Department of Defense technology to play with as long as they give a backdoor to the intelligence agencies. And they get to play these, celebrity entrepreneurs while they're essentially building this different technology. Trump was also the largest funder, was the Bank of New York Mellon family, a key player in the financial industrial complex. And also Mariam Edelstein, an Israel First lobby group. So that's what Trump is. Who is he? He works for the financial industrial complex. So if you've got the Trump administration, which is negotiating all of these deals for the banks, Jerome Powell, that answers to the banks, and the financial industrial complex, which sits on top, that is also deciding which of these companies gain access to the debt capital markets, and they control the Federal Reserve, and they control fiscal policy and treasury. You've got this, these companies that are able to engineer a pump and dump in Bitcoin. And all you need to do to protect yourself when that event happens is own Bitcoin in self-custody and understand what's coming. Because when they want to crash Bitcoin to get your Bitcoin to trigger all the margin calls in Cantor Fitzgerald, and they've got a bunch of managed Bitcoin, and they got the number one shareholder in Strategy, they can combine this financial industrial complex in order to, what they can't do is manipulate the long-term price. The fixed supply is the fixed supply. We're seeing that with gold right now. But they can do elaborate schemes to steal your Bitcoin, put a bunch of companies in Chapter 11, end up dollarizing the Bitcoin like happened in most of the bankruptcies, doing a leverage buyout where they lend to one player in order to acquire others. And it looks like Strategy might be that end player for BlackRock's Bitcoin division, for the Bitcoin that they actually control. And this is not a reflection on Michael Saylor. This is anybody that has a public company that needs access to the debt capital markets in order to pump the price they are a tool for the financial industrial complex. There is no independence there.
If what you're saying plays out, how can we identify the inflection point, and what are some potential catalysts for that?
I don't think we'll know. But they're going to want to build up as much leverage as possible. I think when more and more people are borrowing against their Bitcoin, that's the optimum thing that they're trying to build up. So I keep an eye on Cantor Fitzgerald. I keep an eye on World Liberty Financial. I keep an eye on what's happening with the stable coins. I keep an eye on Palantir and the manipulations that are happening through artificial intelligence. I keep an eye on all of that. And then if you think about what was the trigger of 2021, well, it was the macro and geopolitical environment that all kind of triggered together. You had the inflation is transitory. You had the escalation of the Ukrainian and Russian war that led to spike in oil prices, that led to an inflationary cycle, that led to manipulation of rates. We've seen the Federal Reserve ever since 1913 engage in probably 20 of these pump and dump cycles. Like, you can find them. Like, just look through the whole history of the Federal Reserve, 20 pump and dump cycles that they've done in order to end up with where Wall Street and the wealthy control 90% of the stock market to 10% of the network. So when you're at the maximum leverage point, and you're at the point where Bitcoin needs to be weaponized in a geopolitical play, i.e., at some point, this network is going to dump America and the dollar. At the moment, they make a lot of money out of controlling the dollar. Eventually, the dollar is going to be useless to them, and they want to change. They want to reset the chessboard and really transition us deeply into this multipolar world. And they'll be utilizing both, I think, Bitcoin as a negotiation and foreign currencies to price other products. You'll see oil being priced. It used to be, the petrodollar used to be 100% dollars, now it's 70% dollars. If that starts coming down to 50%, you're seeing, this resetting of the chessboard. And I think you're seeing right now the collective West moving into civil unrest, because they know that they need to move this to, a command and control state. The tactics of this network that have historically been done on the global South, on Asia, on the Middle East, they're coming home now. That's really clear, because the dollar doesn't have as much influence with the rise of China and various other things. So the geopolitics, then you get the macro. And the macro is what's happening right now. Well, Trump is doing fiscal dominance as a strategy. Fiscal dominance means that they are increasing the debt, and they are inflating away the debt, and they're going to create an ultra inflationary cycle. So the price of everything's going to go up. Tariffs were a tax on the American corporation. Inflation, when they put their prices up, that's a tax on the American consumer. So they make it look like they're doing something else, but they're actually just getting a bunch of tax. And then they're saying, well, we're paying down our debt. No, you're not. They increase the debt ceiling. The government shutdown happened today. They increased the debt ceiling to $5 trillion. What are they doing? What was the big, beautiful bill that Trump announced? A bunch of money for Palantir, a bunch of money for Lockheed Martin, a bunch of money for General Dynamic, a deregulation environment for artificial intelligence, a bunch of money to Oracle. These intelligence funded operations that rely upon Pentagon budgets. They are ramping up the Pentagon budgets. So you have a fiscal dominance, which means the rich get richer and the poor get poorer. It's that K-shaped economy where those that are deep in debt, they're just trying to survive, and the others are leveraging debt in order to accumulate more assets. So once you have that geopolitical situation, plus you have the macro situation, then I think Bitcoin becomes the perfect tool to engineer some kind of pump and dump cycle that resets the chessboard. And I think we'll know about it. It will look like a very sophisticated version of what we saw in 2021 and 2022 with these Celsius. That was the playground, that was the beta test. Now they're setting up the big game, and the big game is going to be a big reset of the chessboard. And I think Bitcoin is a tool that they can use, and that's why all the central banks are buying gold right now. Gold is at all-time highs. People outside of America cannot get enough gold in exchange for their dollar reserves. And the only countries that are still lending to the US government are the ones that the proof of weapons network controls. The UK, we're just fully vassalized and controlled by, Keir Starmer might as well work for BlackRock and Lockheed Martin and JP Morgan. Like, he might as well sit in that office. He ain't working for the people. He's just printing money and sending it to those companies. And Japan. Now, Japan's actually pivoting. This is a post-World War II country that is the largest lender and purchaser of US bonds. They're pivoting now. They're turning east from west. And so when you have the two largest countries that are propping up this debt-based Ponzi scheme, then all of a sudden the bag holders of the dollar are the American people. And that's why Cayman Island is the largest lender to the US government right now, because that is BlackRock, that is JP Morgan, that is all those different funds. And that's what stablecoins are for. Genius Act was a way of turning the Federal Reserve's balances that the bank had into stablecoins, creating a shadow central bank digital currency for JP Morgan, and allowing players like the Trump family and Elon and various other players to have their stablecoin. This is all being built up, and I think we'll witness this cycle during the Trump administration.
Well, Wall Street is definitely coming to Bitcoin, and it seems also to crypto as well. And, as someone who's only been in the space since 2020, but an observer before then, I can't help but feel that all of the shenanigans of the crypto space are going to be reborn within a Wall Street framework. And we're talking ICOs, where people just create money or tokens out of thin air and pump and dump them with exit onto retail. Yield is going to come back for certain, and perhaps a few entities fraudulently misstating their balance sheet, like we saw with FTX as well. And potentially the rejuvenation or the renaissance of algorithmic stablecoins. I wouldn't say that concept has died for good either. Do you see any of these fraudulent games being reborn within Wall Street entities, or can you see them already, or the precursors to them?
Yeah, absolutely. So what's the difference? So that everything we have experienced in the crypto market was a deregulated version of what Wall Street does in a regulated game. And Wall Street has a few tools. By definition, fiat currency is a Ponzi scheme. There's not enough debt to pay. The dollar is debt. All of these fiat currencies are debt. And every time they create money as a debt, i.e. a mortgage, the interest to repay the debt doesn't exist. So you have to roll it over. So that is a Ponzi scheme by definition, fiat currency, that requires ever increasing debt until you get to a civil unrest environment because the K-shaped economy is too bad and people can't survive and the others end up with the asset. And so we had a resistance against that in 2008. That started with the Lehman Brothers Chapter 11. I'll remember it forever. I think it was September 2008. I remember where I was. And we had all of these elaborate tools that were built in the global financial crisis. But what is the difference? The difference is that they get to socialize the losses and privatize the gains. They're going to do the same with the Bitcoin and crypto market. So they have the ability to tokenize everything into these real world assets, issue stable coins that are backed by government debt, follow the US fiscal dominance strategy, and turn everything in Wall Street into tokenized stocks, tokenized everything, even the energy markets, give you a carbon credit score, give you an ESG score, allow you to trade through these tokens. Prediction markets, absolutely everything is going to come out of this. Is going to be more and more financial weapons of mass destruction in order to manage the game. And the only difference is that they can actually borrow money from the Fed for these fiat currency loans, and they get to socialize the cost and privatize the gain. And in the end, where this is going. In the end, it will be the biggest elaborate Ponzi scheme and rollover possible. Mass rampant speculation. I mean, look at the American economy right now. 70% of the American economy is services, and the largest service is financial services. And so it is a ultra financialized economy that is just essentially loving this tokenization wave and this stablecoin wave and everything you can do and all the commissions that you can earn from it, to steal more money from those that are paying the inflation, through money printing, and hand it over here, create an elaborate debt, Ponzi scheme again, but this time socialize the losses and privatize the gains. And what do you issue to everyone in the end? You issue them a stablecoin, helicopter money, that builds the foundation for universal basic income, that's integrated into Elon's social credit score, that's integrated into Palantir's artificial intelligence technology. There is no doubt in my mind that is the future of fiat currency, and that is the transition that they are managing right now. Why? Because they know right now that civil unrest is the number one enemy of the West, because they're bringing those tools home, those tools of colonialism and war that they used everywhere else. They're bringing them home. And when people use their freedom of speech on social networks, they're building their social credit score. They're not giving you freedom of reach, they're just giving you freedom of speech because they want you to talk. And when you, in America, use your Second Amendment, and you're not going to be shooting guns into Palantir. We're in a digital war. But they will certainly use that, just as they are beta testing on the UK, to give you your digital ID, and to give you all the formation. And when there's so you have that civil unrest, immigration is the tool, clearly. Like, this is not governments that are deciding to use immigration in order to solve demographical issues. These are civil unrest campaigns. They're raging war. They're then allowing borders to come in, and then they're engineering hate campaigns. It's the Jews that rule the world. It's the Muslims that are invading. It's the radical left. It's the far right Nazi right. They're engineering all of that in order to get as much hate as possible. That's clearly where we are right now, and that civil unrest will be weaponized in order to issue this universal basic income, or whatever the end solution will be.
It does feel to me like there is an agenda to amplify social issues, to generate and exaggerate social unrest in order to distract from the problems of the system.
Yeah, if you look at, Elon Musk when he acquired X. So he acquired it by borrowing against his Tesla shares. And the same propagators of this, the financial industrial complex, lent him the money in order to be able to buy X. That means it comes with terms and conditions. And those terms and conditions are that you need to follow the agenda of the proof of weapons network, and you need to build the tools for the technical industrial complex. And that is what X is. And we're all using it, of course, because we want to get our message out, and we've had freedom of speech for the first time. But I'm fully aware that I'm building my social credit score here, and I'm fully aware that it's going to be weaponized. And so I'm utilizing that for as long as possible. But you want to be building your Bitcoin exit. This is your self-custody side. This is where Bitcoin comes in, because there is no stopping this train. I think, Lynn Walden always says that for the fiscal dominant strategy and the debt-based Ponzi scheme and fiat currency. That's true for the artificial intelligence story as well. There's absolutely no stopping this train. And it is the only solution is get as much debt as possible, devalue the government debt, and save people with a universal basic income as we transition to this AI world. And everybody's got a few years to make that shift. And I don't want to be, sometimes people, when I describe this, I talk about doomer, they call me a doomer. I'm not a doomer. I don't want to paint the world as worse than it is or better than it is. I want to tell you how I see the world as it is, so that you can prepare. Because you got to see the world as it is before it is. And you right now, if you need more, there's simple strategies. Just own more Bitcoin every month, and hold it in self-custody. Like, that's something everyone has to do. Everybody has to do it. That's the future of your decentralized ID, your decentralized data, your decentralized social. The skill of self-custody is something everyone has to do. Sadly, the old people just ain't going to master it. But you need to learn that, because you need to protect yourself, because it took me 10 years ago in 2015. I predicted where I think our country was going. So I left the country, I prepared my exit. I invested, made all the investments I needed to do. I made a commitment from when Bitcoin was $3 to own more Bitcoin every single month, no matter how much it is. I was deep in debt at the time. Now I got 10 years to prepare, and I'm prepared. I'm prepared for this. And I think everybody's got five years to prepare from today. So everybody needs to make a commitment from today that they need to prepare for this. And even if it doesn't happen, if it turns out, Simon, you're crazy, you're just some radical conspiracy theorist, you will be in a lot better position even if this doesn't happen, because you prepared for what might happen. I think this is happening. And I think it's not something you can wait to happen and then suddenly try and figure out how to fix it. You need 5 years. You need to decide, what am I doing with my debt if you're deep in debt? There was a moment I left investment banking in 2006. I tried to create a bank. I went in creating that bank, which didn't work. I got very deep in debt. And I had a choice at the first Bitcoin conference to either pay my debt or buy Bitcoin. And I can't give you the advice. There's consequences to this. But I decided I have to pay myself first, and I have to build an asset, and then one day I'll be able to pay down my debt. And I made that decision. That decision was the best decision I ever made.
That sounds crazy, given how early you were into Bitcoin. What gave you that conviction that Bitcoin had longevity?
For me, I got Bitcoin because I found it at the exact time when I realized that there was no solution to the debt-based Ponzi scheme. And so before I was a Bitcoiner, I was a part of a monetary reform community. And we used to, in the UK, there was, I was part of it in both America and the UK. I think it was Dennis Kucinich that had implemented a bill in order to ban fractional reserve banking. And I spoke at his conference in Chicago. This is before Bitcoin. And in the UK, I was a part of a group called Positive Money. And they used to meet. It was a bunch of pensioners and old people that would meet. It was boring as shit. We used to go to this place in Birmingham called Bromsgrove. And we used to go to this hotel in Bromsgrove where all these pensioners would talk about how we're going to move to a gold standard again and eliminate fractional reserve banking. And we used to debate it. And there were all these old school people that were a part of the monetary reform community for all these decades, trying to get the world back onto a gold standard. And they knew me as the guy that knew technology and the social media guy and, all this type of stuff. So I would take their thoughts and I would put it up on YouTube and share it on social media. So this is 2006. I left investment banking. I then decided that, look, after working with there was a guy who was a part of the community called Dave Fishwick, who created a BBC documentary on trying to create a bank. And he wanted to create a community bank just to pool together money and lend people that money. And it was like this BBC documentary, and we went to Parliament and we presented in Parliament. And I also was invited to Sir John Vickers, was the person that was doing the investigation into the financial crisis and the reforms that needed to happen in order to make banking I forget what it's called, the bank stability thing that was happening. Forget what it's called now. But I was in these communities trying to persuade banks of the monetary reforms, i.e., I've got a good idea. Why don't we just have a way, way less profitable business where there's full reserves, and fractional reserve is a problem. Obviously, they've captured the system. They're not receptive to that. So then I would go to government and try. And then I realized that the politicians, I met a guy called MP Steve Baker, was the only one that actually understood money and was part of the monetary reform community in UK. Of the 650 members of parliament that had zero clue. They thought it was a conspiracy theory if you said banks, when they issue a loan, they create credit. They thought that, no, banks don't create money, that's a conspiracy. And these were the people that were in charge of getting us out of the financial crisis, So I was involved in those communities, and I said, look, why don't I just create a fractional reserve bank? I had a bunch of savings from my career investment banking. I left and just did about a couple of years, really geeked out on understanding how banks work, read all the Bank of England papers, read the entire history. I was writing my book at the time on how to transition, essentially what would later be known as a central bank digital currency, how to take the digital balances of banks, impact the share price to transition to full reserve. And I said, right, why don't we just create a full reserve bank? And so I created a company called Bank to the Future. It was incorporated in the UK. We started in 2009, just after the financial crisis, and we applied to the Bank of England for a banking license. They told us a few things. The first thing they told us is, firstly, you have to put 60 million as a deposit to continue this application. I didn't have 60 million, and I didn't know how to raise it. And so that was the first condition. The second condition was, right, you want to do full reserves. Okay, you can do full reserves, but you have to build on top of a clearing bank. And there's only 4 clearing banks, and the only one that would allow us to use their technology was Barclays. And so they said, you have to build your bank on top of Barclays. And I go, but that means that my full reserves will be their fractional reserves. And so they said, yes, and that's how it works. You have to build on top of a fractional reserve bank because we're not going to give you clearing, and you need to put 60 million deposit to continue the application. And you have to adhere to all of this surveillance so that people can't move their money, and you have to have this elaborate anti-money laundering program and Bank Secrecy Act and all the things that had come through. So we went to them and said, we want a bank where people can own their money, people can spend their money, and we want it where they are full reserves. So there's no risk in it. Essentially a stable coin as we know it today, but trying to do that on the banking rails at the Bank of England. So we lost all our money investing in that business. And we couldn't raise the deposit. So we gave up. And that was the moment that I got a direct message on Facebook Messenger from a guy called Johnny Bitcoin. And Johnny Bitcoin said to me, hey, Simon, that monetary reform meeting, the positive money meeting and stuff, hey, I've decided to sell my house. And I've moved into a squat in Old Street, London. And I put all my money into Bitcoin. This is this is very early pre $10 Bitcoin. And he was in that squat was a person that was working on core development. His name was Amir Taaki. And Amir Taaki he became the spokesperson, the very first spokesperson on national TV for Bitcoin. And this guy is radical. Like this guy is the worst person you could put on the face of Bitcoin, because he would say things like, Bitcoin's great. You can launder money. And, the government can't do nothing about it. And you know what I can buy with my Bitcoin? I can buy drugs. And he was in this crack den. And obviously the BBC loved it because it was that early perception of what they wanted to portray Bitcoin as. And so he was like the face of Bitcoin in the early days. And you can go back and see Amir Taaki and these, he was drugged out giving these interviews in a squat.
Well, you can just imagine how popular he'd be for media to get an interview with him, because he'd just repeat those things that were so sensational.
Absolutely. And so Johnny Bitcoin had moved into this squat, had put all his money, sold his house. The price of Bitcoin over that year did incredibly well. He started investing in various different startups and stuff. But he introduced me to Amir Taaki, and then Amir Taaki said, would you like to come and speak at that Bitcoin conference in Prague? Myself, I went there and I gave a presentation, still up on YouTube on my channel. Max Kaiser was there. And this is when Bitcoin crashed from $30 to $3 at the time. And there were these radical people. And so the moment I sat down, and I was writing the book as well at the time, to hear the Bitcoin message, I had been through understanding that you couldn't solve the problem that Bitcoin solved in the traditional rails. And so when I realized that this is money you can earn, money you can spend, and money that has a fixed supply, I was 100% receptive to that message.
So you knew they were features that at least a strong, small community people were looking for. But what made you think that it would expand beyond that? Or did you not care if it did?
No, I didn't care. So we were the early Bitcoin community. We were a bunch of cypherpunks and activists that, no one really came from money. No one was in it for the money. We were there to create a way of transacting outside the banks and try and help Julian Assange keep WikiLeaks alive. And the early Bitcoin podcasts were like, I remember, was it one of the early interviews I did, it was called Bitcoin Not Bombs. So I was part of the, this whole proof of weapons network. It was my routes before Bitcoin, because I was part of all believing that the banking system funds wars and understanding the history of central banking and how it was created as a scheme to fund wars. And so the early podcasts were that type of community. We were Bitcoin Not Bombs. We were cypherpunks. We were us versus the banks. No one was there to make money. Like we never imagined that this would be a scheme, we never imagined that we'd become rich out of this. We just wanted to create freedom. And when the price went up, I was like, okay, maybe I should invest some of this. Well, and so what we did is essentially we pivoted Bank to the Future into a way of Bitcoiners pooling together their money and investing in companies. Through that, we got access to rounds like Kraken, Coinbase, all the companies I mentioned before, BitPay and various other companies. And so we managed to put together a pool of people that wanted to invest in the Bitcoin companies, and the bank became Bitcoin, and us allowing these companies that were going to make Bitcoin better to get funding. And then we've never looked back since. We were in fact a Bitcoin treasury company because we had Bitcoin on the balance sheet. So we never needed Silicon Valley. We never went public. And Bitcoin funded the whole thing, which gave us a level of autonomy and independence in our company that meant we would never be consumed into the proof of weapons network. And I did the same. Rather than paying my debt, we hit the point where we realized, holy shit, this is fixed supply and the demand is going up and up and up. The utilities going up and up and up. And suddenly, it kind of transitioned into a realization that this was actually simultaneously an asset and the best asset that existed. And so it was at that moment when I decided, Bliss is my wife that we co-founded the company with. We need as much Bitcoin in the company as possible, and we need to get as much Bitcoin as possible, and we just need to own more each month. And so from then we had the conviction. Actually, Bliss was very convicted. My wife, very fortunate we were in this together, and she had the same conviction. And we just decided, right, let's let's not pay the debt. Let's default.
Well, I just want to touch on that because there's a meme in the Bitcoin community about the reluctant wife, trying to talk her husband or partner into selling Bitcoin to renovate a kitchen or to do the house or go shopping or whatever. But, I've spoken to a few couples in this space, and actually the woman has been the one who's had the strongest conviction from the earliest days. So it's really interesting that you reflect on sort of the anecdotal evidence that I've come across as well. So, that meme, we need to retire that meme, I think. I mean, it gets a lot of engagement, but we need to retire that. I think the women in Bitcoin are every bit as convicted as any of the men, that's for sure.
Bliss was more convicted than me, absolutely. So she was as far as I know, she was the third woman in Bitcoin. There was Stacey Herbert with Max. There was Isabella that created Trezor. She was at the Prague conference and she was running like an incubator. And then there was Bliss. And Bliss, as soon as she saw these crazy people at the Bitcoin conference, and you can only describe them as ADHD autists. Like there was this one guy I remember, I still don't remember who it was. He just kept kicking his leg and he was very awkwardly on the stage giving this amazing presentation around how Bitcoin was going to allow you to have bikes as currency, and there's going to be these barter networks, and just this very elaborate presentation that Bliss really liked because she's British born but her family's from Bangladesh. And so she understood community and peer-to-peer systems, and that people would pool together money, and they wouldn't borrow. Riba and interest is illegal in Muslim countries, and she understood all these concepts. So as soon as I took my financial experience, and she worked at Barclays Bank, and we quit together. I was in investment banking, she was in commercial banking, but combined together, we were completely on board. And she was very convicted. She just, every single month, she made sure we got to have more Bitcoin. And then we just made the decision, let's default on the debt. We'll pay the debt off later. And we did pay the debt off later. And we paid my father's mortgage off. And we got to the point where we had enough Bitcoin that we knew, some of the worst purchases I've ever made. We bought our house for 1,000 Bitcoin. But we knew that there's a moment when you calculate this will be the worst.
That's $10 million if you're doing the calculations, right? It's more than 10 million right now. So
where are we now? That's 100 million, isn't it?
No, 1,000.
1,000 Bitcoin.
Oh, 1,000. Yeah. Sorry. Yeah, it is. Is it 100 million? Yeah. I was thinking.
I get the zeros right in my head. Yeah. 115 million. Yeah. So, it's going to be the worst investment you ever make. But this is the journey of a Bitcoiner, earn more Bitcoin every month. And then when you need to fulfill certain obligations, know that this is going to be the worst investment you ever make, buying a house. But does it provide you with another need, security, whatever it is that's right for you? We wanted to build a castle on an island with the best security possible, because safety became important. So we set about doing that. It was the worst investment we ever made, because real estate and property is if you price everything in Bitcoin, this is the shift everyone needs to make. Price everything in Bitcoin and price everything in gold, and you'll realize everything is a bad investment. The stock market is performing awful. Real estate is performing awful. That's the mental shift. Once we shifted to pricing everything in Bitcoin and pricing everything in gold, the whole world makes sense. We're just devaluing the dollar, and so assets look like they're going up. And when you price it in Bitcoin and gold, everything makes sense. If there is one fundamental shift, take every chart of everything, even your Bitcoin, and this is how you protect yourself from volatility. Like, if you're buying more Bitcoin this month, whatever the price is, it doesn't matter. And you'll always buy it at the top. Every time I buy Bitcoin, it's at the top. And I think, oh shit, if I had just waited another few hours or then another few days, I would have got a better price. It doesn't matter. It's completely irrelevant in the grand scheme of things. You buy your Bitcoin that month, and if the price crashes, you've got more Bitcoin that you get for your fiat currency. So you love crashes. Like I can sit through any crash. This could go on for years. We could enter into a multi-year bear market where everybody is depressed. Everyone thinks it's over. I've just seen that cycle so many times now. And I know that every month I'm getting more Bitcoin for my fiat currency, and my community of people that are bought into this ideology are all getting their chunk of Bitcoin, and they want the price to go down. Like, they celebrate when it goes up. It feels good as your fiat currency wealth goes up, but it also means you're getting less Bitcoin. And so you are in a 5-year race to accumulate as much Bitcoin as you can. There will never be another 5 years like the 5 years ahead. AI is going to change everything. All of these changes, the world's going to change. The dollar's going to be, everything's going to change. And this next 10 years will be the radical, I think, the fastest shift the world has ever seen. We are alive today in that 10 years. In the next 5 years, you need to accumulate as much Bitcoin as is humanly possible. Not financial advice. I can't promise things will be the same as they were in the past, but I can tell you I'll still do it, even though I've got more than, enough. But what am I going to do? Am I going to hold it in fiat currency? I mean, I've got gold for security. I've got my real estate. You start to make these decisions, and this is how you get on the other side of the K-shaped economy. The only way I know to beat it is, and everybody can do it, is decide, do I want to pay off my debt or do I want to buy more Bitcoin? You got 5 years to make that decision. And at the end of that, you're either going to be on a universal basic income or you're going to have Bitcoin in self-custody. And everybody else would have given it to Wall Street. You would have kept yours. You don't care what Wall Street do with their pump and dump scheme or whatever they're going to do with Bitcoin. You got yours, and everybody else is going to be on universal basic income, is my prediction. And if that doesn't happen, at least you would have accumulated your Bitcoin and prepared for this world anyway.
There are a couple of things I want to add to that. The first caveat is you want to buy with money that you're not going to touch for 4 years minimum. So you're not putting every last bit of cash that you have and then hoping the price goes up high enough so you can pay your bills and put food on the table. It's money that you're not going to touch for your living expenses for 4 years. The other thing is just to balance out the conversation, and I agree with you about having a strong appetite and discipline to accumulate Bitcoin. But there comes a point where you have to start improving your life. You can't just look at your UTXOs and, bask in the warmth of your computer screen in a desolate apartment with a mattress on the floor and bed sheets that should have been changed 4 weeks ago, sort of thing. The meme of Michael Saylor created, how many chairs do you own? So we've all got one chair, we've got a mattress on the floor, and we're watching our Bitcoin go up in value. But there comes a point in time where you do have to invest in improving your life. Otherwise, what's the point of accumulating wealth? What would you say to that?
I completely agree. Everybody, the thing that Bitcoin does, once you've solved financial anxiety, and I know what it's like to be I know what it's like to be in financial anxiety. The reason I got into investment banking in the first place was actually because my father grew up, he was born in 1933, so he went through World War II. And he lived in a house in poverty in a town in England called Bristol that was bombed during World War II. And he found himself under a table with 6 brothers and 1 sister, and all sleeping on the floor, in absolute poverty. His father became a bus driver. Interestingly, a bus driver after World War II could pay for 6 sons, 1 daughter and a wife. And obviously they had a very frugal life, but can you imagine doing that today? 7 children and your wife, and him went out as a bus driver. That's the impact of inflation.
Well, just to give people some context, Transport for London advertises for bus drivers salary paying about 25 to 28,000, as though that's a really good salary for a bus driver. Can you imagine with 30 grand, even 60 grand, 100 grand trying to pay for 6 children, even just going through state school and living like you described, a frugal life? It's just not possible.
No, the maths don't add up.
No.
And so that doesn't, but that was the post World War II life. And my father, he bought his first house in Kensington, borrowed some money. He got a house on Kensington High Street for £12,000.
For people outside the UK who are not familiar with London's boroughs and streets, Kensington is one of the poshest, most expensive boroughs you could possibly aspire to live on or even own any kind of property. So to be a bus driver, to be able to buy any kind of property in Kensington High Street is insane from the 2025 perspective.
Yeah. So my father, came from this poverty, managed to, actually he did it by, and I don't recommend any, like my father, he's passed away. He actually passed away the same day that Celsius closed their withdrawals, which is interesting. So it became a bit of a thing for me. But my father, he brought me up, and, he went from, he made his first chunk of money through gambling in the casinos. Then he bought a house in Kensington High Street with that money. And then from there, he managed to, build, essentially become a millionaire in pound value. I think he built up to £1 million, and it took him his whole life. So he got to the point where he retired, and £1 million to him was such a massive number. I mean, that doesn't get you anywhere today, but that was such a huge number for him. He retired and then decided to get into the stock market. So he started trading stocks, and I was just under 20, 1998, and he was winning because this is the dot-com boom. And he kept winning and he kept winning, and he went through the shitcoin cycle. He was winning. So then he just put everything in. He put everything he had ever made in. Everything was invested. He was trading, trying to buy the top, do the bottom. There was nothing but just believing I'm a good trader because I made a load of money out of a rising market. Then the dot-com bust happened, and he lost everything. And so his entire life of rags to getting to $1 million just completely blew up in the stock market, where he had less than 10% of it left. It was such a traumatizing time. And he said to me, son, what happened to my money? Where is it? Who's got it? Where's that money? That was my entire life. He just didn't know where it went. And it was at that point where I decided I'm going to get the answer to you. And so that kicked off my obsession in money. Led to me working in banking and blagging my way up in those areas, then leaving, doing monetary reform, and then finding Bitcoin at $3. So it's kind of a continuation and a cycle. But the proudest moment for me was just to pay off my father's mortgage.
What did he make of your success?
My father was incredibly, incredibly proud. He didn't understand it because he got really angry when I left investment banking. He thought, you got this amazingly paid job, and then I was in debt, and then I was struggling, he could never understand that. And then I started accumulating Bitcoin, and I'd try and always tell Dad about this Bitcoin stuff. And every time the price he kept watching it on the news. And every time the price went up, he goes, son, cash out, let's get out, cash out now. It's going to crash, it's over. Because he had that in his psyche. He remembered the stocks. And you remember that they pumped up in price and then they come back down. And his whole thing was buy real estate, and he couldn't get that out of his psyche. And he didn't believe me that Bitcoin was a good investment or Bitcoin was something that would change until the day when I managed to pay for a private jet for him to come to the island and, come to the house and experience after paying off his mortgage and doing all that stuff. And it was when he walked in, for him, everything was physical. Once you see a house, it is real. And he couldn't get his head around digital wealth. He couldn't get his head around a virtual business. He was like, Simon, when did you go into the office? There is no office. I'm working on what do you mean you're working on a laptop? What do you mean you're working on a computer? Where are people? He just could not transition from that world. And And so eventually, once he saw a nice house and a mortgage paid off, then he was like, okay, son, you made the right moves. And he was very, very proud of that. And yeah, I got to give him the life. I mean, he was frugal. He never asked for anything, but I got to give him the life that I felt he deserved for backing me. That was our journey. I can't remember why. So that's how I got into this whole thing, and I forget where our conversation was that
That's
took
a
us on
beautiful
this
story.
path.
I appreciate you sharing that with us.